Good morning, friends and colleagues. I think when I look around the room, I can see so many people that one way or another I've obviously bumped into over the years. So just a brief introduction. I'm Sian Fisher and I'm the current CEO of the Chartered Insurance Institute. But prior to that role, obviously I spent about 10 years in MGA land, if you want to put it that way, firstly with a start-up business called Oxygen, and then after that we sold our business to Gallagher's. So I had a very interesting experience of trying to integrate an entrepreneurial MGA into a big corporate. So the topic that we have in front of us today is, so what does it take to run an MGA in 2018? Recently, we've been collecting quotes around what is success, what does success mean to people, and we've had many and various, starting from the Greeks coming forward, but the one that I actually really liked was one that said, success happens when opportunity meets preparation, so good luck with that. And that really struck a chord with me, because the sort of the basis of MGAs seems to be that people have fantastic ideas all through their sort of life journey in insurance. And then very specifically, sometimes those ideas actually hit a moment in time, either with capacity providers or with customers. And then, as we see, there is the opportunity for entrepreneurial businesses to be set up. But there are big challenges, obviously, around setting up and continuing to run SME businesses. You know, you've got to find the right entrepreneurs, you've got to find the right partnership with capacity. Challenges around now, particularly around technology and innovation. Ongoing challenges, as I'm sure will be discussed in some detail, around regulation and compliance. And then, as if that isn't a big enough challenge for MGAs, put all that together, of course, the vexed topic of underwriting performance, on the basis that, you know, if you actually make an underwriting profit, result happiness, and if you don't make an underwriting profit, doesn't matter about most of the rest of it, result unhappiness. So we're very fortunate to have a very experienced panel with us today in Catherine, Ash, Brendan and Sam. And one thing that struck me when we were having our pre-conversation about today's session, I know that this afternoon there's actually a specific session on diversity and inclusion which Barbara Schoenhofer is going to run. So we won't deal with that specifically here, but it'll probably come up. But it did just strike me that the MGA part of the market has always been, and I hope we actually are fairly representative of this, has always been somewhere that struck me that there is a lot of diversity and inclusion. And not just from the people who work in it, but also it seems that the MGA space is the greatest advocate and champion for specialty sections, communities, types of customer, which are not fully given opportunities and representation in the standard market. So, you know, a big shout out for diversity and inclusion in the MGA sector. So what I'm going to do is ask each panel member if they would very briefly tell you who they are and tell you what their business interest has been, and also, you know, why they wanted to belong to and be a member of the MGAA community. And then we'll get into the meat of the conversation. And each of the panellists has agreed to lead on a particular topic, but obviously the other panel members will chip into that. So I hope that makes sense for everyone. So Sam, perhaps we could start with you. Where are you from?
My name is Sam Bobo, and we run a small MGA called Opus Underwriting, which started in 2014. We're a small business and are facing the challenges of compliance and regulation. But we specialize in intellectual property. That's all we do. It's a niche area that we believe we can make underwriting profit. And being a member of the MGAA makes sense for us, because that's where we get, you know, all this.
Ash?
Right, so some of you hopefully know me, Ash Bathia. So I'm currently CEO and active underwriter for Syndicate 1492, Probitas, which we set up about 2.5 years ago, just over that. We don't specialize, we write property, construction, and all the casualty classes, the core classes of business. Fascinating for me being here and being part of the MGA kind of landscape is I really understand some of the challenges, having started a new syndicate in Lloyd's, all the regulatory stuff. Lloyd's adds another dimension to that, building up a business, trying to manage costs, trying to make an underwriting profit, trying to get third-party capital providers to support you over long term. All those challenges are very akin to, I think, a lot of you have already been through, and a lot of you very successfully. So this is a great perspective, as far as I'm concerned, getting a real understanding of what your challenges are and how they correlate with what we've done.
Thank you. Catherine.
Hello, I'm Catherine Bell. I'm chairman of iNet3, which specialises in UK non-standard property. I founded the business 25 years ago and have taken it from a small regional-based business, maintaining our regional foothold in the East Anglian region. And we've grown our business to have approximately 40 staff now. We represent mixed capacity, so we have Lloyd's syndicate backing and companies market. We've built incredibly strong relationships with our broker partners, and I think one of the important things we have to remember when we're running a business is everything we do has to be about the end customer and the customers that we're looking after. And the strengthening of those relationships in a world of technology does not become moribund because you are using technology. And that's one of the things which I think we need to all remember very firmly as we run our businesses forward. So,
Brendan.
So, good morning, everybody. I'm Brendan McManus. I've spent 28 years in underwriting before I crossed over to the dark side in broking about 10 years ago. About 3 years ago, I did a startup called PIB Group. Since then, we've bought 18 insurance businesses in the UK, 4 of which are MGAs. And in those 4 MGAs, we've subsequently launched about 12 products. My next project is looking at MGAs in Europe, where I think we can take the intellectual capital that we've got in the UK, in the MGA space, and start to distribute product in Europe.
Thank you very much. So we thought we would take sort of four main themes that seemed to come out from the survey before we actually started this session. And I was going to start with Catherine, if I may, because Catherine is a representative of a sort of classic MGA type, if you want to put it that way, which is, a very independent, very entrepreneurial, very partnership-driven business, not based in the main London market, but actually based out in the community. And I thought it would be very interesting to hear from you about how, as an entrepreneur, you get going with a business like that, and how you keep it going, and then what you think the particular challenges are now in 2018. Probably around technology and innovation and data.
Thank you so much, Sean. Yes, so one of the things that I'd like to touch on is just from personal experience, some of the challenges that we faced as a business as we tried to steer our way through some of the minefields, which it's almost like people are throwing grenades at you from time to time, and you're trying to sort of prepare your business to be robust against those very necessary regulatory environments. And also, in order for your business to thrive, how are you going to thrive in that challenging environment? And what I was hoping to share is how a small business like us, we haven't been daunted by those challenges. Rather, we've turned them around and looked to be innovators within our own space. And how to do that, we've actually looked to go out of our arena of insurance and to look to partner with people who have different specialisms from different sectors. And I thought it might be useful to share our specific journey on one one of those technological journeys with you, because it does turn things around a little bit from the natural evolution of technology. So as underwriters, a recurring theme was how can we manage escape of water losses? Now, we need to return a profit to our capacity providers. We need to make sure our clients, the end user, policy holders are not going through terrible situations where their homes are ruined by escape of water. It's a scourge on our sector for UK property particularly. And there are a lot of challenges with our business where we work day after day, underwriting risk, touching every risk, looking to do it profitably, when something out of our control happens to undermine that happening. And it is a big problem. So through somebody sitting in this room who is visiting today, an introduction was made to a technology company in Cambridge who specialise in the utility space. And they developed technology called for smart meters for homes. And in a conversation we were having, there were some clear synergies of their journey in developing technology to make the home a smarter place to live and how we would prevent escape of water happening in our sector. And 4 years ago, I met with the team and I said, we've got a real problem and we want to be the difference. We want to be the business that innovates this with you and we want to bring this to the market. And it doesn't matter that we're small. Ignore that we're small. We're passionate, we're knowledgeable, and we really care about this problem for all stakeholders. We really care. And at BIBA 2018, we launched the finished article, a piece of technology called Waterlock, that can be put in homes at under £300. It can notify and switch off the water damaging the home. Now, the reason I mention this as an example is not to just publicise Waterlock. It is to show that if like-minded people come together from technology businesses and from other sectors and work with insurers to deliver our specialism with their technology, we can be powerful. And any business out there who has a specialism in underwriting where there is a big problem, that is where I would be identifying the opportunities. Because if you can help to solve the problem as an MGA and you can help to underwrite profitably for your insurer partners, you're demonstrating that you will actually do something about a problem. So I hope that that is an interesting example of how a very small business in Bury St Edmunds can be innovative, can apply technology and can make a difference to the policyholder. Mm-hmm. And I hope that's...
So Ash, you've recently set up your business, and you were commenting when we started that technology has moved on hugely from when you last set up a business before. Mm-hmm. So how have you found that experience?
Yes, I think so. For me, there are two corollaries to technology. I think one is on the risk management side. So that's, I think, what Catherine, you're referring to. I think recently with all the activity in the Caribbean, I think somebody came up with satellite imaging to actually identify damaged locations. There's another kind of use of technology from a claims management perspective. And the second corollary really for me is how you make your business more efficient and more cost effective. Mm-hmm. Because costs are killing businesses, we all know that. And the regulatory burden is here to stay and it's going to go up. So we can't cut any corners on that. We have to spend money on that. But I think we need to improve our operational efficiencies as a business. I think legacy businesses have massive challenges with multiple technology platforms, trying to rationalize all that, rationalize the data. So I think it's difficult. But I think for new businesses or for the smaller businesses, technology has moved on a long way. You can use Microsoft open source data to be able to build your own technology platforms in the cloud at a much lower cost. You can own the IP. You can develop new products within that. It takes a lot of work, but actually, I think with the new landscape, what's happening with the technology space, I think there's a lot more we can do for ourselves rather than just relying on kind of established third-party vendors.
And Brendan, do you see MGAs from your perspective as somebody that's looking for opportunity to buy businesses? Do you see that MGAs are really contributing new ways of doing things to the market?
Yes, I do, but I think there's a mixed bag of results there. The ones that I think really work for me are the ones that are super specialist in a niche, really in a quirky product or in a very quirky area, an area that the capacity providers can't get to easily. I don't see that MGAs that are in a very generic space. I think Chile mentioned it earlier on. Somebody writing shopkeepers insurance and tradesmen insurance, that's just not exciting. I don't think you can ever have as much data in those spaces as, say, Aviva. If you can't get more data in the space than Aviva, I don't think you should be underwriting it. So, yeah, I think there's a mixed bag of MGAs out there. The ones that we see generally, when they come up for sale, are ones that have got a problem with capacity, and clearly then, we don't want to buy fixer-uppers. We love to buy businesses that we can invest in because it needs more people, more technology, maybe more investment in product development. But the vast majority of MGAs, I would say, that we see because they've got a capacity issue. And as I say, we don't buy fixer-uppers. We buy businesses that are pretty solid and that we can invest in.
Have you seen an MGA with a particularly good system that you? Because often when I go around and talk to MGAs, one of the things that they'll lead the conversation with is, my platform's really good, but a lot of them are proprietary and have been developed over a number of years for quite a specialist sector.
I think that's a good point because both Catherine and Ash have mentioned about the investment in technology and what they've been able to do. I'd say from a purchaser's perspective, again, a bit of a mixed bag of results. I mean, I tend to look at businesses that are using industry standard platforms as being more valuable than those that have got home-built technology and might rely on Colin from IT who's sat in the corner and all the IP is in his head. That's no good for us because eventually Colin's going to disappear. So I like to see the IP being embedded in the business, and sometimes that means that I would value a business that's operating on a market standard platform more valuable than something that's, excuse the expression, home-built.
Yeah. Okay. So, Sam, yours is a very specialist MGA business. So, how have you found this issue of, have you been able to go and buy off-the-shelf technology, or have you had to develop your own system?
So, we are in a very specialist industry, and one of the two things that we have is a system that we in-license that helps us assess risk. Mm-hmm. And it's a system that we've said to underwriters, to our capacity providers, we need to have this in order to be able to fully understand the risk. And that is what we bring to the table. We've then also looked at how we manage the business. And you look at situations where do you develop one yourself or do you go and get one from a service provider? We've opted to go with a service provider. Mm-hmm. But we've had to look very carefully at who we're going to be working with. Mm. And we believe that the service provider we work with currently provides the kind of services that we want. Mm-hmm. And I think those two combined give us that special extra that insurers would be expecting to have.
But I know you have quite strong views on people should have their own systems rather than...
Yes, I have a slightly different view, and I've been listening to what Brendan has to say, and I can understand where he's coming from. But faced with a decision to embed technology into our own business 12 years ago, we made the decision that there was not a market available solution that we were looking for. It just wasn't. And the ones that we could find were not nimble, not responsive. And as a small business, we were going to be at the very bottom of the list because a lot of the companies they were going to be dealing with, providing software services, we didn't feel our business would be at the core of their priority list. So we made a very difficult decision, but in hindsight, a fabulous decision, and I really thank goodness we did, to start with a blank sheet of paper and build our own fully functional trading platform, which is a specialist platform for underwriting non-standard property. And it allows us to deliver a product to market in 6 weeks. We can build it ourselves and deliver it. And we can not only do that, but we can deliver to our broker partners a portal for their own website so that we can empower our brokers to use the technology that we are building on their behalf. So in terms of distribution, that for us is a better model.
So you felt you couldn't get that from...
No.
Because obviously here today there will be, I would imagine, quite a lot of...
This is 12 years ago and things
Yes.
have moved on. And it may be if I was faced with the same decision today and there were more available, flexible software providers who could empower us with the nimbleness we need to run our business, and the niche element of our business could be reflected in the system. But there's another very important thing, and that's control. You know, we want to control our businesses. I don't want a third party controlling my business and when it will and will not do something. I just, you know, I like to be in control of the client journey. I like to be in control of the compliance and regulatory piece with the technology. And, you know, my business partner, David Reed, who can't be here today, he and I, we have a fundamental rule in our business. Will we sleep at night? That's it. If we can sleep at night and we feel we're in control, happy days.
Well, building on that theme then, Ash, I should think the one thing that causes most MGAs not to sleep at night is the issue of capacity. So you're in an interesting position in that you are a capacity provider.
Correct.
But being a Lloyd's syndicate, you are also requiring people to support you as well.
Yeah.
So how have you found that, both sides of that capacity position?
I think interesting and challenging is the way I describe it. It's not been easy. And I just wanted to give a slightly wider perspective in terms of, at least in my opinion, where the landscape now is, whether it's MGA or whether it's Lloyd's Syndicate or anything else really in our industry. But just specifically focus, and I don't have the answers, and this is a very personal opinion, so forgive me if I'm a little bit controversial here. I've never known to be controversial before. So I think if you look at MGA space the last 5 to 7 years, it is a fashion statement. It is vogue. If you look at the current valuations on MGAs, they are very significant. You hear about a potential new MGA being set up virtually every week. There's been a big increase in broker-led owned MGAs. It's become a key strategic pillar of revenue and growth for the bigger brokers particularly. And there's been the introduction of alternative and new capital in that space. Reinsurers are coming in because they can't access direct access, so they're sitting behind other people and putting together fairly complicated vehicles to get access to that business as well. So what could possibly go wrong? We are in a world of panacea when it comes to MGA space. Everything is going amazingly well. Well, my question is, and I said I don't really know the answer, is there not some necessarily direct correlation between the market cycle dynamics and the proliferation of the MGA space? It's a question. People need to reflect on that. And is it driven by oversupply of capital, real insatiable appetite for top-line growth, and from what I've seen, and we're probably a little bit guilty of this ourselves, dropping in underwriting standards? Is there a correlation? That's a question. And a couple of examples I would cite. As you know, Lloyd's is going through a fairly robust process of remediation in the business on the back of a number of the results. The broad perspective of Lloyd's business has grown by, I think, just over 30% in the last 5 years. Guess what? The combined operating ratio has deteriorated by more than 30% over that period of time. So interesting dynamic. I was at a presentation on direct and facultative property business within Lloyd's, which is a class under review. 60% of all Lloyd's D&F business is done through binders and MGAs, and it's one of the worst performing classes of business in the Lloyd's market. some correlation there between the growth of business and profitability.
I would just challenge that slightly. So I'm not in a position to completely challenge. The only I was given a perspective on that the other day, just to say the way that Lloyd's actually looks at direct and fact business includes the service companies of the syndicates themselves.
Yeah.
And so there was just a slightly cheeky implication that although it's easy to blame the binders and cover holders, probably Lloyd's needs to look at its own writings through its service businesses as well before actually blaming the MGA space entirely for that performance.
I don't think it's blaming MGA. I think at the end of the day, we have the pen, okay, underwriters. We give the pen to the MGAs, we give a pen to our underwriters. You can't blame anybody else. If something goes wrong, you blame yourself first and foremost. I think MGA it's now become a very, very significant part of our market and a very important part of our market. So I was just giving a bit of perspective around, just what's happening with growth and what's happening with the market dynamic against, what the opportunities and challenges are for the MGA space in that context. So if I use that context, my question again is, are we waking up to a new dawn in the market? And that applies equally to the normal underwriting and the MGA space as well. And in that context, what's going to happen in the market? I know within the Lloyd's market, we've already seen there's been quite a lot of noise and actual action in terms of withdrawal of some capacity and some lines of businesses. And this will probably continue for the rest of the year and probably for 2019 as well. So what does it mean for an MGA? What do we need to do to actually use this as an opportunity? Because I always believe that when there is a potential threat in the market, there's always an opportunity which sits behind that. So for me, what would an MGA, how I look at an MGA space and what I would expect from a really good MGA. I think that the given one is the quality of underwriting. That's a given. But I think to be more and more supported by analytics, I think there's a complete correlation between really good analytics and actuarial, and I don't mean actuaries driving the business, but actually supporting the business in the right way. I think we talked about, Sean, you mentioned specifically the quality and sustainability of the capacity. I think it's more important than ever now that the capacity providers you have or you choose going forward are going to deliver on a long-term basis, because there is clearly going to be some disruption in the market, and the MGAs who have performed and delivered will be fine. The ones which are going through a bit of a difficult time, I think the time is going to get more difficult from this perspective.
And you actually, Brendan, you just raised that. You said that quite a few of the people who are coming to you, it's because of capacity. And what do you see causing that?
First and foremost, probably a lack of due diligence from capacity providers on the way in. They just think it's a great idea. Let's get some top-line growth. We can't write it in our own business because we've got 9 levels of governance gates to get through. Yeah. But it's probably easy to give the capacity to somebody else.
Absolutely right.
And he's a good guy, type of thing. So there's a lot of that. I think there is a few get-rich-quick type schemes out there as well. Certainly when I'm looking, I think actually capacity providers should have much more rigour around provision of capacity. I agree with you, Ash. And it should be much more difficult for an MGA to get capacity than it is. I've long believed that underwriters should have the equivalent of a driving licence stamped with their accident year results every year. And that should be what's provided in due diligence. How many years have you lost money in underwriting? Oh, that's no problem, we'll give you some capacity then. So I think the whole space should be a little bit more difficult for either side. And the reason I say that is because when those relationships are short-term because people don't make money, it's very disruptive for the customer, or could be very disruptive for the customer. If it's disruptive for the customer, then it's bad for our industry as a whole, whatever part you play in the distribution chain. And, I think our regulator would then see that as negative for us in terms of providing a consistent service delivery and product for our customers. So, I think both sides need to be much more rigorous. we need to do much more diligence, I think, from the capacity provider side on the quality of the underwriting and the underwriting triangles. I think sometimes I see capacity given to quite new ideas that really probably don't have any long-term track record or maybe not any real underwriting substance, and that's the problem. And that area of I don't know, that kind of poor behaviour might only be a tiny part of what happens in the market, but it can destroy value for all of us if we're not careful.
So Sam, again, given that you are in a very specialist area, have you, presumably your underwriting results have been exemplary. But I just, have you, because you've been involved in underwriting for many years, so have you seen a really close connection between, the knowledge and specialism versus generalism driving better results?
Yeah, I think you can't run away from the fact that if you bring in specialism within underwriting, you'll get the support from capacity providers. I've been involved in an MGA before where we brought all of that, but then we found ourselves in a situation where the underwriter who had originally agreed to provide this capacity, and he was an underwriter who sort of said, don't look around, I'll give you 100% capacity, I want to be able to do this business. The problem that we found was, to no errors of our own, that underwriter was fired from the job. And the person who took over from him sort of said, anything that particular underwriter did, I don't want to get involved in it. So all of a sudden we found ourselves as an MGA without a business and frantically trying to look for capacity. What I would say to most MGAs is be very careful about the capacity you're going to be using. I think there should be a commonality of purpose, and also, be able to meet long-term goals. Don't look at it from a very short-term perspective. I'll be wary of an MGA that relies on one sole capacity provider, because again, you could find yourself in a situation where you do not have business. And I think as MGAs, we need to bring something that's different to the table. Otherwise, you just become part and parcel of what everybody else is doing.
So is it still the norm that you're seeing that it's annual capacity, or are you seeing longer term arrangements, Catherine? You've
Ours
been
are
doing
annual
this the
capacity,
longest.
yes, with 2 companies market, 3 Lloyd's syndicates, and we've broadened our capacity relationships in reflection of what Sam was just saying, by recognising that actually you need to spread your relationships and make sure those relationships have common goals and common aspirations, because even in one class of business, it's amazing how different insurers understand different elements of even one small class. So you can go to one insurer who has got a particular appetite for unoccupied property, for example, but they don't know very much or not really very interested to touch thatched property. So it's very important that your business grows in a way that it's always underpinning the sustainability of the business and managing your own risk within your business as well as managing other people's risks. And I do think that there are a lot of very good insurers out there. And MGAs who deal with insurers who have long and very good track records. For me personally, it's a very good choice for our business to deal with Lloyd's syndicates or rated company market insurance, where we feel that we have delivered a very good product to our end clients. So that would be my choice.
And how much interest do you, say Sam, in your very specialist area, how much interest would your customer, your end policyholder, how much interest would they have in who the actual risk carrier was?
That's very important to our customers, because
is that sort of universally the case?
Yes.
Yeah.
Yeah, we target most of the clients that come to us are commercial clients, and they're very savvy in understanding intellectual property. They also know what it is they want to protect, and as a result of that, they want to know who the capacity is behind, our binders, and using unrated paper would not work for us. We have to use licensed, rated good paper, and we use Lloyd's for that purpose. We find it easier to explain to clients.
So Ash, where do you think the unrated issue comes from? Because it came out as top of the questions that people wanted to be talked about today. But because it is a highly controversial topic. But if the logic is that end policyholders are very concerned about who is actually underwriting their business, why do we have an issue with it, or where does it come from?
I think it's interesting. There are two very clear camps on this. I think you've got the more sophisticated buyers of insurance, and they will look at the security behind the MGA, and especially, Sam, in your business is critical. Anything which is long tail is critical. Any large businesses, but when you look at the other side, the more the unsophisticated buyers, who really want to see a piece of paper. Some of them don't even know who the insurer is. The insurer is the actually name of the MGA or the broker a lot of the time. So they really have very little understanding of the implication of an unrated, non-rated paper. And it's now down to, I guess, really how you communicate that with your customer without actually putting them off too much, or do you take a view that we are not going to use unrated paper? There's a reason why paper is unrated. Fundamentally, is because it probably doesn't have the same financial stability as rated paper. It hasn't gone through the same level of due diligence. So, unsophisticated.
To be fair, Ash, I don't want to be controversial, but to be fair, how many times has rated paper gone bust in the last 10 years? So it's not. Our whole industry is quite lazy, I think, and we rely on a rating when the raters often get it wrong, and we've had an example recently with CBL. So it happens time and time again. The fact is that you probably can rely on the bigger brands, but I wouldn't rely on a rating by itself. But as an industry, we're quite lazy because we go to the rating, we go, it's got an A rating, it must be okay. Well, it's probably not as okay as we think it is sometimes.
No, but if you apply a general rule, then rated paper is going to be more sustainable. This is just a reality of the position we're in. To me, it really is a question of the two camps, and we've got to work it out. And we all know when a company goes out of business, how much dislocation that causes and how much stress that causes to the business. So if I was personally running an MGA, I would be I'll do my due diligence. And, it's not just the quality of the paper is defined by the rating agencies. I think when I sat on QB's group security thing, we looked at not just the financial status of the company as defined by the rating agencies, but also, the culture of the business and the willingness to actually pay claims and look at some of the softer factors of your partners. I think they're as important as what the financial statements actually say. So it's a very difficult space. Sometimes in some areas of the business, it's much easier to place with unrated paper. I don't know whether they're more competitive or easier to deal with. I don't know the answer to that. But personally, I think it's a shortcut, and as a business, we shouldn't be taking shortcuts.
So that sort of the behavioural aspect of what Ash and Brendan were just talking about. So obviously, regulation is a big part of an MGA's life.
Yes.
Sam, and I know that obviously you've experienced that in many different ways over many different years. But I suppose there's now a big emphasis on the sort of not just on ticking boxes for compliance reasons, but there's quite a big emphasis on conduct, particularly conduct in relation to the end policyholder.
Yes.
So do you think that's actually a good thing for MGAs, or is that just another bothering thing that everyone has to think about?
Now, I think we need to understand what we are as MGAs. We're an extension of the insurance company, and those kind of issues are topical, important to an insurer, and we need to take on that responsibility as well and make sure that we protect policyholders. So it's inevitable that we have to consider those things as well.
And Brendan, do you see, I mean, obviously the accusation's often made of the sort of the wholesale or the intermediated space, particularly when you sort of mix broking and MGA. You know, the accusation is that's all about commission rigging and nothing to do with the customer. But you know, what's your?
Well, first of all, I don't mix them up. They're all. I run an insurance group that invests in brokers, in employee benefits businesses, in risk management businesses, and underwriting businesses. So we definitely don't mix them up. But absolutely, our purpose should be to run an ethical business that does good things for customers, for the end user. And if we don't set out with that mission, then I really believe it's not worth getting up in the morning. So we absolutely have to do that. I just want to go back to this rating issue, because actually in a regulated world where all insurers should be operating at Solvency II, that should be the benchmark. Unfortunately, of course, our regulators are not leaving it as a level playing field. So we have some regulators who are letting people go for much longer to get to S2 than others, and I think that's been part of the problem. But yeah, going back to your point, absolutely, we have to run ethical businesses where we design products to do good things for customers. And I'm actually proud of, in a number of our businesses, that we do things that are really, really special for people that are quite vulnerable. So for people, for instance, that have got impaired needs for travel and things like that. It makes me feel good about what we do when we can develop those products and help people with their lives.
Okay, so just coming to back to you as it were in your role of building your business, when you're considering an MGA as part of your group, what is it that you're? I mean, you've said a few things, but how do you have to feel about it to actually want to?
First thing is it needs to be as specialist as possible. I really like quirky, niche, geeky areas, and I like quirky, niche, geeky people as well. That comes with it. And that's the second thing, the quality of the people. I have a kind of a folksy attitude, but I think if I could have those people in my house on a Saturday night, then I could probably work with them. So there's got to be a kind of a meeting of minds around people, because guess what? In an MGA, we're not going to buy your business and cash you out on day one. You're going to have to stay around for quite a long time. So, for instance, we insist that all vendors roll over at least 20% of their proceeds into our topco. So that means that they're fellow investors in the overall group, which means we're more likely to collaborate, integrate, focus on the same initiatives and so on. So to make sure we act as a whole, it's very important that we have that reinvestment. It's also very important because those people are going to have to stand up for the results that they've been creating in the MGA for quite a long time. And they're going to have to continue to manage the relationships with distribution and the relationships with the capacity providers. So we're not a cash-out type consolidator. We are cash-in, actually, if anything else. But then we invest in those businesses, whether it's technology or people or distribution or marketing. So it's very much a partnership rather than a cash-out mentality. But what we look for most of all is quirky specialisms and great people who want to stay around and work with us.
So what would make, I know you've been offered on many occasions, Catherine, for people to buy your business. So you haven't.
No.
Is there a real reason behind that? And what might make you consider selling to someone?
Well, it's a very interesting question. I think Brendan hit on a good point when he said people who are coming round to your house on a Saturday night. I like that. Except I've been working with many of the people...
They don't all come at the same time.
We're all round to yours. No, joking apart, many of the people in our business have been with us for the duration. So whoever said that business is not personal got it terribly, terribly wrong. Because actually business is terribly personal when you've built it from scratch, and the people in it are there and they've come with the business on that journey with you. And so simply selling a company is not an easy journey to make. On the other hand, we all have to recognise our own mortality and our age and potential pitfalls in our business continuity plans. As owners of businesses, we have to look at ourselves not being in the mix. We have to have a cold, hard look at our business and say, if I die tomorrow, what have I done about my business? And I can sit here today and tell you I've done everything I can humanly do to become redundant from that business if I die tomorrow. Because to me, that is the responsibility that goes hand in glove with business ownership and bringing on young, talented, diverse inclusive behaviour into the business, to be able to bring on that talent and empower them. You know, it's interesting that I think it was Warren Buffett said that if you employ talented people, why do you then continue to tell them what to do? They should be telling you what to do. And the great thing about our particular business is it's very young. Virtually all the people I would like to empower in our business are under 33. They're all young, they're all capable, and I feel the business is in great hands. And so who knows, maybe my own team will buy the business one day. Maybe there will be an MBO. Maybe somebody will come along with a compelling offer which absolutely reassures me that the people in the business have a future. Because actually I care more about the future of the people of in my team than I do about my own financial gain. And that's the truth of it. Yes, I do want to make financial gain, and I'm a businesswoman and I want to make money, absolutely. But I also want to balance that with caring about the people who've helped us get here.
So Brendan, you made a comment when we were talking before about the fact that it's a reality that actually MGAs need to think about what their exit is before they actually set up. So I believe you weren't saying that because you believe 2018 is the death knell of MGAs. I don't think you meant that, did you? But so what did you mean by that?
I think because because it's a people business, it's not bricks and mortar. You know, you're not selling a second-hand Ford Sierra. You know, you're selling a business that's going to have to persist for quite a long time. And as Catherine just said, it might have to do without you. So how do you plan your own exit from the business? So I think exit planning from an MGA probably has to be done more carefully than even a broker, because often the IP is in the vendor. You know, the person that started the business is still, their DNA is part of the business, and it's very difficult to value the business without them being there. So often I see people who put their business on the market because of age or illness or whatever else, and they haven't actually planned it. They should have. I've often said to people, it's a great business, but you should have done this 3 years ago, or started doing this 3 years ago. So I think it takes 3 to 5 years of planning to exit an MGA business really effectively.
Yeah, and obviously I actually experienced that. We had a very funny experience because I suppose we were very early stage, very early stage MGA, but we actually set up OIM in, I think it was 2000, yes, so we officially 2004, but we wrote our first policy in 2005. And then in 2007, so only 18 months in, it was as if every broker in the London market woke up one day and thought, we want one of those. So we were sort of just approached by absolutely everyone. And for us, it was actually quite an emotional experience because we did think we were onto something, which is obviously what everybody else agreed with. But when you're a start-up business, of course, you've got shareholders who've risked significant amounts of capital to put into the business at an early stage. So, of course, if a big buyer comes along and says, you know, we'll pay you a premium price, it's a massive temptation, obviously, for the shareholders to de-risk their situation. But I do remember that. And in a funny way, we might well have been victims the other way round, that we hadn't actually thought that might happen to us. So in a way, we hadn't set up the business in a capital way, which would have protected us from somebody coming and trying to buy us. You know,
Sean, we're talking a lot about exit, but actually we should maybe talk about
in
the roundabout, because if I wasn't backed by one of the world's biggest private equity businesses, and I was starting a business, I'd start an MGA. I think it's still a really exciting space, particularly if you can find that deep specialism, because you don't need a lot of capital to start. And you can find the help around the industry to get you going. So, and actually you don't need a huge amount of technology to get going either, because you can get help there. So, I mean, I think the MGA space is vibrant. I think it's very exportable. I see the MGA space growing in most of the major countries in Europe in particular. I think there's a huge opportunity for people with expertise probably in this room to go and use their entrepreneurial skills in MGAs outside the UK. So I think it's a hugely vibrant space. It's never had a better time.
And the MGAA, sorry to interrupt, the MGAA, I'd just like to pay a lot of respect to the MGAA itself, because as a regional business, we didn't have the contacts and the relationships that we needed to understand the market better. When you're based in a small provincial area, you're inside the tent, looking inside the tent and trying to look outside it, and you can't. And joining the MGAA and becoming a board member of the MGAA, thankfully elected by maybe some of the people in this room, and thank you for that, that enabled our business to benefit from the insights that we all learn being part of the board of the business and helping to grow the association, which has worked tirelessly to bring together this community. You know, we're all sitting here today. I think we had 780 people sign up for this event. It's a gargantuan change from where we were. And Jane Comerford here, and Peter Stadden and the team, the executive, Teresa, the board, everybody has given their time, everybody voluntarily, to grow this community. And I'd just like to thank everybody for that, because actually it's helping all of us. And all the things that Brendan's talking about, if people want to start an MGA, if people want to get involved, come to the association, get involved, contribute, pay back, put back in, help younger people coming through, put a hand out to people. We're all in this together.
So there's an interesting, so I'm just looking at some of the questions that have come up here. So perhaps Ash, I could just ask, it says, the question is, if underwriting results are a prerequisite for allocating capacity, how will InsurTech startups delivering new streams of business find capacity? Actually, probably both of you are probably good people to answer that.
Yeah, I think that's a really good question, and you know, there's a lot of talk about InsurTech in our industry. I don't think InsurTech in isolation is the only answer. You know, Catherine and Brendan have talked about people. You know, our business will continue to be driven by people, but I think what we can do is help people by using technology and InsurTech as an enabler to the business. I don't think it can be the complete answer. But there will be some disruption, I believe, from more technology-led MGAs, and I think one has been launched recently with very big aspirations, and that is really driven by technology. And I guess it kind of makes some sense, because if you look at a business model of an insurer, you know, you look at the acquisition costs, and one of the things I think we all have to be aware of, and particularly as MGAs, you know, let's not push those and let's rely more on profit commission than acquisition costs. Second one is the operational expenses. Again, you know, for your own business and also for an insurer's business, and if you're running at, you know, 6% expense ratio as opposed to 12% expense ratio, it makes a huge difference to creating that profitable model. And if you can cut your operating expenses back just because you've deployed technology in the right way, then it can make a huge difference to the business, both for you, for the underwriters, but more importantly, you can actually put out more competitive products for the customers. So I think it's a very interesting space. I don't think it's going to be a revolution. I think it will be an evolution. You will see more people coming in, but the opportunity for an existing MGA is to actually, before somebody comes and disrupts our business, you know, let's go a bit more proactive and use some of the technology, I think.
Ash is absolutely right, because the business is coming in. We should be those businesses. We're perfectly placed. Right. We've got the experience. We've got the years under our belt. If we can only embrace the new technology and be the innovators, the pioneers in that space, the businesses in this room will be the businesses that are more attractive to investment capital, because they have that experience. They've got the scars to show it. And I love working with young people, but you need a balanced involvement of both young, technical, capable people and older, experienced sort of business people to work together, so that we, within our business models, we can be those innovators.
I think just sorry.
So take a different view.
Yeah, I think InsurTech is shorthand for lose underwriting profit for the next 10 years. I see some. I actually mentor a couple of people in InsurTech businesses, and they're brilliant people. They've got great ideas about what the end user proposition is, and the proposition for the end user is brilliant, but it isn't going to make any money for an underwriter for a long, long time, maybe never. So there's that dichotomy between the two. And I think you're right. We should get hold of those ideas and invest and drive them ourselves, because I think we've got more of a chance of making them profitable because we've got the experience. And I say that bearing in mind I'm the male, pale and stale guy in the audience. So.
So, Sam, I've got quite a few questions here for you, but they seem to sort of stem from one question, really, which is what advice would you give to budding entrepreneurs wanting to set up their own MGA in 2018? And there's some kind of questions about, you said your IT provider, works for you, but do you have to work very hard on the relationship? And also, experiences you've had with getting your capacity.
Yeah, I mean, if I start with the capacity issue, that was not so much of a problem because of the experience I was in writing that class of business. The real issue was, in fact, finding capital to launch the business.
So working capital, or set up capital.
And set up capital. But I think the key issue that we need to think of as MGAs is, now that I have the capacity, I have the funding, how are we going to run the business properly? And you have to set in motion certain key things. You need to make sure that the systems, you've got people looking after your systems. You have to have separate people looking after your finance, all aspects of the business. I concentrate more on the underwriting because that's my area of speciality, but I have to get other people to get involved in the business, and that's how we've managed to grow. It's not easy. In the time that we've set, since 2014, we've had cover holder audits in every year. So we have underwriters coming in to make sure that everything that we've said we're going to do is being done, and that we have total control of what's going on.
And it says here compliance in-house or outsourced. What do you think about that?
As a small business, you have to balance all of that. So we started with compliance being outsourced. But over time, we've been bringing most of that, function in-house, and ultimately we will have total control of that. But you have to make decisions that meet what you have from a funding perspective.
We do both.
Yeah.
So we have internal compliance, and then we have an external party who monitors what we do, because that's the sort of belt and braces approach I think a business, especially a smaller business, can benefit from, because not only does a third party scrutinise your own internal performance, but they may be more market aware of other issues within compliance which could be ahead in the road and that you need to be aware of. And we've worked with a team in Manchester who've been very, very useful to our business. Yes, an extra cost, but one that we believe is worth it.
And that's exactly what we do.
Yeah.
But is it extra cost to you weigh up building up your own compliance and team and whatever you need to do? Is it much cheaper to just have that outsourced fundamentally?
We think both work well together, having internal and external, because your business has to be scrutinised internally and externally. You need to look at yourself, and you need, one of the reasons that we have NEDs on our board, we have Paul Smith here today and Adrian Colosso sit on our board. And why did we choose those particular individuals? Because actually we wanted plain-speaking, experienced businessmen to tell us where we were going wrong and to actually hit it. I'd rather somebody told us how we were doing everything wrong in an honest, open way so we could do something about it. And so the same applies.
Well, you certainly got that from Paul.
We certainly got that from Paul. But no, it's wonderful if you embrace the problems.
Yes.
If you embrace and listen and have an open mind with the problems and understand that they're just opportunities in disguise. That's all they are. A problem was only ever an opportunity to shine.
So there's a good question here from Clive, who I saw was sitting here, said, so what claims model do you operate, and do you think it's optimal, or are you finding that the capacity provider is undermining what you think the claims model should be? Who wants to comment? Ash, I mean, you're on both sides of that, so how have you seen your claims model?
Yeah, I think claims is ultimately what defines you as a business. When the client has a problem on a claim and you deal with it effectively and efficiently, that goes a long, long way in terms of reputation and ultimately client experience. So I think the claims model we've deployed as a syndicate, again, going back to the whole compliance and regulatory, we have to have a turnkey managing agency for at least 3 years. So a lot of that functionality is delivered by the managing agencies, an outsourced model. But I agree, it's not enough. I think you've got to have people within your business who know your business, understand your business, to provide that linkage between your business and the regulatory. And same applies to claims. We have a fundamentally outsourced model on the claim, but we have a general counsel sitting in our business. We have a very, very senior claims person sitting in our business who understands, all the dynamics of claims. And then they are linkage to our outsourced provider to make sure that whatever experience we're getting from the outsourced provider is very much experience we want to deliver. Otherwise, it can go horribly wrong. Effectively, you're relying on somebody else to deliver your claims experience to your clients. Ultimately, they're going to blame you.
Yeah. And what do the two of you do? Do you both do your own claims, or do you?
No, we outsource our claims, but we have very great oversight and involvement. Yeah. And in terms of monitoring those, our board work very closely with that team to pinpoint through dashboards and other reporting tools to make sure that we're all cognizant of issues coming from claims within the business, and we can pinpoint, identify and manage those very much with insurers and third-party claims handlers. I mean, we quite like the fact that we can't be accused of any disparity on how many claims we're paying because a third party is managing that for us. And I feel that there's not a direct conflict of interest that is necessarily could be attributed to our business because of that arm's length transaction.
You'd still have somebody internally that would manage that outsourced relationship.
Yes, exactly.
And would have an opinion on it, or is just managing it?
It's managing, identifying, and the executive team are involved in decision-making around that, and we have a very proactive role with
and what about you, Sam?
Because our area is quite specialist, we can't outsource our claims handling.
You do it, do you?
So we do that, but we work hand in glove with underwriters, our capacity providers, again, utilizing some of the analytics that we have to guide them in making a decision on a claim. So there's
a very important element to the claim in terms of sort of first notification stage of a claim. When an underwriter has been very actively involved in underwriting a complex risk, that underwriter will have a lot of knowledge that was garnered during that underwriting process that could have taken a lot of time, and it could have actually got a lot of reports based on the structure of the property, for example. And so around that topic, I think it's useful to have that intelligence involved in the process of the claim.
And that's what we bring to
And that's exactly what we're bringing to the table. And also there is another element there, which I don't know if everybody else agrees, but we work so closely with our broker partners, and some of the brokers we've worked with are for so long that we can also sort of factor in who the broker is. The broker is an important part of the underwriting criteria, because if it's a very good broker who's worked with you consistently, solidly, accurately, very well, and there is a claim, that is part of the process of evaluation.
So I'm very conscious, obviously, that I'm relying on Slido. I mean, Paula does have a roving mic. So are there actually any questions in the room? Because I know that fumble fingers, well, I'm certainly fumble fingers, so the technology doesn't always work for me. Is there anything? Otherwise, I'll return to Slido. Okay, not to worry. So perhaps we haven't spoken about the big B, the big Brexit question. So there's quite a number of, obviously, questions saying, how do you guys, is it going to affect you? How are you worried about your capacity providers still being able to provide, if you write non-UK business? Are you still worried? Are you worried about how your capacity providers are going to manage that situation? How are you feeling about that, Sam?
I mean, we write business internationally, so Brexit is a big concern for us. What we've had to do for our binders is to extend them to the end of the year, really, because we're not quite sure when we straddle into 2019 what the effect is going to be. So we're watching, to see what's going to happen. We have made preparations for being able to conduct business in Europe. So we may have a subsidiary that will operate in Europe. But again, these are things that we are putting in place in case we have to go down that route. Lloyd's itself, because we use Lloyd's capacity, have said for MGAs that are currently authorized, it'll be easy for us to get authorization for the
UK bit.
Yeah, exactly. So for us, that's a solution. But it's something that we're waiting to see what actually happens.
So as a capacity provider, how are you, because you write international business, don't you?
We do, yeah. And I think really, first of all, I think Lloyd's have done a great job of just setting up the base infrastructure and the legal and corporate structure in terms of setting up the Brussels office. The challenge now really is the proof of the pudding and the eating is actually execution of the operating model. And if we can deliver that, I think it's a very positive thing. A lot of the bigger companies have already established platforms in Europe to be able to passport. So I think the base infrastructure, I think everybody's just kind of waiting for what's going on from a political point of view and where does Brexit then sit and what's in and what's out and what the time scale is. But the reflection I wanted to kind of bring here is, and I totally agree with Brendan, it's an amazing opportunity, I think, for the MGA space. It's unharvested fundamentally in Europe. I mean, even if you get Lloyd's, the penetration of European business is tiny compared with, any other market. And to me, I really feel that the front, anybody who goes in first, particularly in the MGA space, and explores that, you can truly actually bring local international markets with a local flavour by actually establishing. So I see Brexit as a real opportunity because we've been really not very good when it comes to, particularly as London market, as European business. So whilst all the challenges are there, I would actually be the first one out there to see whether we can do something a bit more meaningful in the future.
So do any of your businesses doing international business, Brendan, or
Yeah,
is
we
it
do.
all UK?
Yeah, we do. There's a mixture. And we don't know what Brexit means yet, let's face it, none of us do. So I think it's judicious to do some planning around it, and I've planned, if necessary, to relocate our top company to another European country. It's not hard with a name like Brendan McManus to guess where that is. But the reality is I speak to people in Europe every week, to brokers and MGAs, and I think whatever the circumstances our politicians leave us in, we'll be okay. We'll work it through. People still want to trade with us. We've got something to offer.
So we've probably got time just for 2 more questions. So again, anybody from the floor want to ask you one of the last 2 questions? No? All right, I've got 2 quite good ones here. So one says, how long will it be before Google and Amazon wipe out large swathes of the current, it says, horse and cart approach, so that's not my words. I'm just passing them on. So any nervousness in your worlds around Amazon and Google? Catherine?
I think maybe in the general market, in smaller gadget device and insurance, and I think in specialism insurance, niche insurance, it would be very difficult for Amazon or Google to make a business case, because I don't think each individual particular area generates enough profit for a business like that. And so unless they can see massive scale, and they can see that it's a quick entry, and they can see very quickly they make money from it, which I don't think they will, because of the nature of the insurance they'll choose to get behind. I wonder if, even if they did enter the market, if they would find it to be a rewarding experience. So that's my own view.
And I think one of the interesting things is everyone forgets just how regulated the financial services sector is. So a lot of people coming in, they have some level of regulation. Obviously there is regulation of everything these days, but I don't think they appreciate until they come in how much scrutiny there is of commercial practices, of competition rules. And of course, arguably these big tech companies haven't had any of that interference in their business models. And it would be interesting to see how that collides with a highly regulated sector.
Totally agree with that. Yeah.
So, anyway.
I actually think maybe 20 years down the road, they will be in that space. They know everything about us as consumers. And it's so easy to just turn the tap and make sure you underwrite at that point.
Yeah, I think
I agree. By the way, I think in a world in the future where it's driven by robotics and holographs and AI, then yeah, it's absolutely possible.
And they'll be selling, I mean, the interesting thing, I suppose, when you think how much they sell the products that will have the smart devices in them, and that, I can see that link is probably something
Yeah,
they
I mean,
would be
I
very
position my
interested in.
business around advisory. So we have clients that need advising, not clients that buy products. And I steer away as much as possible from people that just buy a product. But even the advisory space can change in that world. And I don't know how big it can get, but I'm glad I won't be part of it.
Are you really that old, Brenda?
Yeah.
All right, so last question, which alludes to something, and I think I've left it till last because I do think it's actually probably the most important question. So you alluded slightly to this, Brendan. The question is, how when you're starting an SME business, how on earth do you make sure you get the right people? Who are the right people, and how do you get them when you're a start-up business?
Yeah, it's really hard. I mean, I think the insurance world is just ankle deep in talent. I wish it was knee deep or waist deep, but it isn't. It's ankle deep. And, we're in a situation now where we're still recruiting, quite aggressively, but we are struggling to find people of the kind of right quality that we want. It's very, very hard. And what I rely on is people that I've known a long time. And then you know the traits they're good at, the things they're bad at. You don't ask them to do something that they're bad at. And so it can only come through an in-depth knowledge of people. And I would have thought somebody who's starting an MGA, you're going to do it with people you've known a long time, people you've trusted for a long time, people who've got a great track record with you. So I think take the people with you that you know.
What about, because Ash, you said you've recruited 40 people or something in the last 2 years, so you've obviously got some views on this.
I have. I think first of all, I think you've got to get the leadership right, because that's where everything starts. And I think you've got to set your tone of your business, what you want to be. You've got to be very clear on the culture of your business. And then your recruitment starts using those. I mean, it sounds trite, but I kind of use the 3 A's. And the first A is about aptitude. You have to have people with aptitude, otherwise there's no point. I think your second A is really, for me, is about people with ambition and drive. So you've got to pick people who have that innately within them. But the third A, which is really, really important for me and my business, I know, it's the attitude of the people. It's a team. It's collaborative. Everybody's working for each other. You can, even if it's 40 people, 100 people, 500 people, I think if you spend enough time to create a culture in your business, then it can continue to be an extended family, irrespective of the number of people. And just, when I was at my previous job, I had 1,000 people in kind of my extended team. I probably made a point of at least meeting every one of them once a year. So we set the tone in the business, which is all about that. And to me, that really, if you set your strategy out from day one, what do you want, and have the right leadership team, because you can't drive it on your own. You have to have the team which drives that, and I think you can make an amazing business.
What about you, Sam?
I share what Ash is saying. I mean, I've worked for an MGA before, some years back, And one of the things I learned from that was at a very young age, I got a share in the business. It wasn't much, but the fact I had a share in the business made me want to see that company thrive. And that's something that we're looking at now as we're setting up the groundwork where members of the business will be part of the shareholding. And that changes the culture of the way somebody works. You find that they are more committed to working late in order to try and get things done. And I think that's very important. You have to set those things up very early on.
And last word, Catherine.
I think we need to go further afield with how we evangelise insurance to the greater talent pool. I think we need to be reaching out to universities, to colleges, to local apprenticeship schemes. The CII are offering a great mechanism to grow your talent internally. We need to spot people. We need to make insurance attractive as a proposition for a lifetime career, because I don't know how many people would agree with this, but virtually everybody I ever speak to says, well, I fell into insurance by accident. Okay, so that's a sad indictment. If literally nearly everyone in the room says, well, it was actually by accident, because I would have to class myself in that.
We do turn around and say, I mean, I get this a lot. People say, I fell into it, and I say, yeah, but you stayed, didn't
yes.
you?
And so...
there's 400,000 of us working in it, so there's something.
Yeah.
And when you look at, I mean, there's so many more ritzy careers, but you look at the salaries. I mean, I look at so many of my friends' children, and I know that my friends, came from very ordinary backgrounds like I did, and they worked their arse off in the city and places and made themselves quite affluent. And then you look at what their children want to do, and they want to work in the media, or they want to, and you're thinking, well, you're condemning yourself to earning 15 grand, unless because there's one Kim Kardashian, and there's 38
I'm certain
million
you could still get on Love Island, honestly.
Exactly. So I think sometimes we do ourselves. I know there's a fact that we're not great at attracting the undergraduate population, but somehow or other they find their way to us, but we need to be better at it.
And I think that's about having role models, diverse, interesting, entrepreneurial people in the MGA space could be inspirational case studies. To share with universities, to share with people. I'm going to meet a group of people doing a business course at West Suffolk College in Bury St Edmunds, because I reached out to the principal of the college and I said, we'd like to attract some talent. I'd like to come and meet all your business aspirational individuals and see if there's anyone there. Well, if we all do that with our businesses, if we all individually reach out to try and attract talent and actually evangelise a bit about our sector, how great it is, how entrepreneurial it is, how somebody like me from nothing, with no backing, little education, could take an idea, could invest in a business and grow it. Well, if I can do that, anybody can do that, and that's what's the exciting thing about the MGA sector.
Good for you. All right, well, thank you very much to all of you, and please I'd ask you to show appreciation for the panel. Thank you. Oh, sorry. And needless to say, because I always forget one thing whenever I do these things. So, are you going to say about your
just interesting
results?
About the poll.
Yeah, please.
Just to say that the question being, do you think it's unsafe for MGAs to place business on unrated paper? Well, 54% of you in the room think it is. 38% say under certain circumstances, and at the moment 8% say no, it's not unsafe. So we'll bring that on to the session. And Sean, thank you very much for chairing a wonderful debate today, and thank you all.
Thank you.